Good morning, everyone. Good morning, everyone. Well, welcome to this MMR. You can hear me. Can you please just type yes? Can we hear me loud and clear? Yes. All right. Thank you very much. Okay. So we can all hear me. All right. My name is Jeremiah, and then we'll be together for the next few minutes looking at where we make money from today. Well, welcome once again. Right. So before I get into the charts, to see where we are going to make um, money from, profit from rather, let me just quickly give us a breakdown of things we would need to look out for, especially if we intend to day trade, if we intend to day trade, all right? Okay, I'm trying to share my screen. Can we all see my screen, please? Yes. I'm trying to share my whiteboard. Can we see it, please? Are we together? Okay. All right. Thank you very much. Okay, let's go on then. So the easiest money um, in the market is actually made anytime the market is in a trend. That is when it is best to make daily profits. Whatever market is trending, the trend is the easiest way to just ride the market. We understand that there are just two types. We have basically two types of trend, basically. We have the up, then we have the down. So we have the uptrend, then we have the downtrend. Now, for these two types, we are only looking at for just one. In an uptrend, we are only looking at for buy scenario. The downtrend, we're only looking at for a sell. We don't want to trade against the trend. It is not wise path as retail traders to trade against an already existing trend. It takes a level of experience to be able to do that effectively all the time. Because we understand that consistency is key in this business. You must be consistent with whatever you are doing so as you will get consistent results, right? So if the results we are getting is not the one we want, then we need to change something or just something with an approach to the market. So basically, uptrend, downtrend, buy, sell. Now, the final confirmation signals to see in an uptrend or a buy trend is actual, it varies from trader to trader. But a very simple one is that is common for these two is that it is very essential to wait for pullbacks. It's very essential to wait for pullbacks. Pullbacks is what would allow us to risk less and be in profit on time. So what I'm saying is if this price is going in an uptrend like this, and at this level here, we enter a buy. Our buy is not wrong, just that we must bear in mind that we might be in a drawdown for a while. So if we enter a buy at this point, we have to prepare our mind that it's possible we are in a drawdown for a while. The market might start pull back. So you need to understand that pullback is what is happening before it will then move again in that direction. But if we want to save ourselves those kind of headaches, once price has created a higher high, we just need to exercise patience and wait for a pullback. Any kind of pullback is actually okay. Just let it be part of our practice to wait for pullback and then we would buy. By doing that, we have done two things essentially. Number one, we have reduced the amount of drawdown we are likely going to experience. And two, we have also reduced our risk on that trade. Because if you buy in this scenario, your risk will be here. But if you buy here, your risk will be here. We understand. So if you flip it the other way around, it's the same thing for a downtrend. Now, using this simple principle, let me now go down to the chart and then we'll look out for opportunities, right? So I'm opening uh, MT4. Let me start from the currency markets and then I'll work my way down to the indices or touch on some commodities as well. Now, this is the chart of the US index. First off, what is going on fundamentally? We need to check, is there fundamental events for today? As that is where our analysis start from, right? So let's go over to forexfactory.com. Check, do we have any major or any high or medium impact news for today? No. So for today, Monday, 22nd January, there are no high or medium impact news at all. We don't have any of such for today at all. All right. Just have low and no impact. Okay, low impact is what we have. One for US, one for NZ. So it means today we can go big on technical analysis and go big on technical analysis. All right. So today there's no major news. It's until tomorrow before we'll begin to have news for currencies. So let's go over to the charts and look at some instruments where we're going to likely pick trades from. So I'm presently on the chart of the US index. We understand that the US index is an important it's a driving force that is driving most of these major currency pairs against the US dollar, right? So I'm presently on the chart of the US index. The major trend of the US index is actually a downtrend. We've been experiencing an uptrend for a few days, but majorly it's actually in a downtrend. When do I know that it's no longer on a downtrend? It has to take out a key level, right? It has to take out a key level. And the most important part of a downtrend is the lower high. So price has to take out a lower high, then change it to a higher low before we would categorically say that downtrend has ended. But because we are looking at for day trade opportunities, we don't need all of these information. We just need to zoom in and look at the most recent move, all right? So let's zoom in and then look at the most recent move. So presently I'm on the H4 time frame of the UX index, and we can see a smooth uptrend throughout last week. And then now price has come back to retest the key level, which is a previous higher high. Price is trying to retest it. So one out of two things is going to happen here. You see that price would go up from here, or price would go below this area. Now, if this price goes below this area, that is a weakness. That is a sign of weakness for the US dollar. It means every currency pair that is paired against the US dollar is going to appreciate if the US dollar goes down. But if the US dollar continues to go up, the pairs against it, major pairs, they are more likely to appreciate. So because we are dealing with technical analysis purely today, we just need to look at what are the most important parts of this uptrend. What is it that I would see that I would know I can buy or I can sell? I know I can buy or I can sell, all right? So one basic confirmation, let me just share that on the whiteboard, to confirm any sign of uptrend is basically using price action, is basically using just two candles, right? Two candles. So we have, for the uptrend or the buy, we have the red first, and then followed by the green. It's possible there's a doji in between them. It does not really matter. As long as we have a red first followed by a green, according to price action, this is the basic signal we need to see. Then for a downtrend, we have a green first. A downtrend, we have a green first, then followed by a red candle. Right? This is the basic price action signal to see. It's possible that there is a doji in between. It's not so important. After all, we are not supposed to use doji in isolation. So what do I mean by that? This retest area where the UX index is retesting, as a day trader, Once this candle closes as a bullish candle, meaning a green candle, then I will begin to think of buys. Begin to think of buys. I'll scale down to a much lower time frame and day trade and pick a buy since there is no news. So because I'm day trading, I wouldn't expect too much pips. Anything between 20, 30 pips, I'm fine. Then I'm off that chart. But what do I need to see? I need to see the close of a bullish candle beside a bearish candle at this level for me to buy. If it's a doji, then I am not buying. If it's a doji, then I am not buying. All right. What do I need to see for me to sell? What do I need to see for me to sell? What I need to see is the close of a bearish candle below this verified support area. See, once I see the close of a bearish candle below this verified support area, that's my signal for a sell, that the US dollar is going to depreciate in value. Now, majorly, we take advantage of the US dollar against other currency pairs, all right? So let's start from the first one, the AUD US dollar. So let's go over to the higher time frame, all right? So the Australian dollar, US dollar has come back to retest this very important key level of the market. Let me highlight that for us right here. So this area used to be a turncoat support previously, but now it is back there to retest. And we can see that it has rejected that area, hoping to push higher. So two things can happen. As a day trader, what I need to see to buy is a pullback, most especially. Now I understand that these 2 days information here, these two bullish candles that we are seeing here, must have created an uptrend on the lower time frame. So if I go to the H1 of AUD USD, I am most likely going to see an uptrend, right? Now, what is the most important part of an uptrend? It is the higher low. The most important part of an uptrend is the higher low, because as long as price is not taking out any previous higher low, then it is likely going to continue in that uptrend, right? So let me highlight those higher low. This is a higher low. Why? Because it created a new higher high. This is also a higher low because it created a new higher high. And then price is not taking it out. Where are the higher highs? Let me zoom in. Let's look out for the higher highs as well. This is one higher high. Price took it out. This is another higher high. Price took that out as well. And then we have a new higher high. We have a new higher high. So because price is not taking out any part of this higher low, then I am still buy bias. I am still buy bias. So I would see all of this move as a pullback. I'm going to see all of this move as a pullback, right? So this is my pullback. Means that if I'm going to buy now, my TP can be here. My TP can just be here. TP can be here. And then my SL can just be below the previous higher low, because that is where price is not supposed to get to. All right. So that would give me a smooth 1:1.5. Okay, 1:1. Yes. So my TP is apparently around 22 pips. And my SL is around 20 pips. So it's a good trade for me. All right. So I would like to take this trade on my MT5 account. Let me log into my MT5 account because the AUD USD has fulfilled all of the requirements that I need to see enter a buy trade. Right. So Australian dollar, US dollar, and going for a buy. Buy. Yeah, then my SL will just be below the previous higher low, and then my TP will just be at the previous higher high, the most recent higher high, right? All right, so Australia dollar buy trade already. So let me go over to the next pair. Go over to the next pair that we're going to be looking at. New Zealand dollar, US dollar. All right. Remember, I said that the most important element of all of this pairs is the US dollar. So let's start from a higher time frame analysis. So the SZD USD been on downtrend for a while. Why? Because it fell from this resistance, and then it has come back to retest this very important key level, which is the previous higher low for that uptrend. So one out of two things has to happen here. Price will either break below or go above. Break below or go above. All right. Now, what are the criteria we need to see? So because we are day trading, the daily time frame is just to see the helicopter view of the market, where we will now scale down to our lower time frame and look for our proper sentiment. All right. So presently, I'm on the chart of NZD USD on the 1 hour time frame. So I can see my previous downtrend. The most important part of the downtrend is the lower highs, right? So let me mark out those lower highs so that we can see them. This is a lower high here. Then we have another lower high here. Then we move down to the most recent one. We have another lower high here. All right. So except price is taking out the lower high, then it's still a downtrend, except price is taking out the lower, because that is the most important part of the downtrend. Now, right now, price has created what is seemingly looking like, some people will call it order block, some people will call it support level, some people will call it demand zone, whatever it is, it's all the same. But let's look at what is the risk involved in entering a buy now. Number one, this downtrend has not yet been confirmed that it is over. And then two, this is just a consolidation on the H1 time frame. To be on the more safer side, it is always wise for price to take this out. Price has to take out this lower high. Once the price takes out this lower high, and then we can now buy just after a pullback. It's as simple as that. Price has to take out this lower high before we can enter a buy at um, this area. That's my buy bias. That is what I need to see before I can buy. What do I need to see before I can sell? Price has to take out the support. Now, there are two kinds of support here, proven and verified support, what makes that area a little bit tricky. So I would like for price to take out those areas, which is also the uh, the last higher low on the higher time frame. So it's a very important area. I need to see price take out some of this support and then retest and turn them to resistance or turn code to resistance before I would begin to scale in on my buy, on my sell trade rather. So take out this support and then give me a pullback, and then I can sell. So one out of these two things must happen. This would be my reason to buy, and then this would be my reason to sell. All right. Uh, so let's move on to the next pair. Let's move on to the next pair. Okay, so let me go over to USD CAD. the US against the Canadian dollar. So I'm opening the chart of the US. The US dollar against Canadian dollar, right? So let's start from the higher time frame, look at our top-down analysis, and then scale down to a much lower time frame. So we have a major downtrend, which price has tried to recover from. So one logic we have to bear in mind as well, anytime we are looking at the chart, is that anytime price is on a downtrend and then the lower low is very, very long, meaning the lower low went down very, very well. There is a very large there's a very high tendency that the lower high is also going to be very, very long as well. A lower low that is very, very long would also produce a long lower high, an extensive lower high. It's also the same thing for an uptrend, right? So let's say the higher high of an instrument went up very, very well. The higher low is also going to be very, very extensive as well. That's one simple logic. So one way to just make simple money is anytime you see an extensive higher high or lower low, just understand that the pullbacks is going to be also that long, right? So that is exactly what we are seeing on the US dollar and Canadian dollar on the daily time frame, right? So we have a major downtrend because the lower low is very, very long. So that is going to also give us a longer lower high. So let's pay attention to what is happening right now. Let's zoom in to what is happening right now because we tend to day trade. All right. So we're going to look at the most recent move of the USD CAD. Now, this seemingly uptrend we are looking at, as we've established that the most important part of an uptrend is the higher low. Is price taking out any higher low on the H4 time frame of USD CAD? No, price has not taken out any important higher low. Now, because price has not done that, then we are still going to be buy bias, except price takes out an important area. Still going to be buy bias. Why? Because we are only looking at today trade. All right. So where price is right now is the most important part of this uptrend. You can see it here. This is a higher low that price is testing right now. Two things must happen from here. Price will either go higher or go lower. One good reason why price will go lower is if the US index weakens. If it weakens, it's a straightforward for USD CAD. But if it strengthens, it's an uptrend. So what do I need to see here for me to enter a trade? Two things. Number one, this price, I would like for it to come back to this key level and give me a buy signal, which is a red candle first, followed by a green candle. If price is not doing that here and it breaks below here, it means it has taken out this higher low. It has taken out this higher, then I'm selling. And I'm selling directly, and then I'm putting my stop loss here and my TP just below. Anything between 20 to 25, 30 pips, I'm fine. I'm good for the day. All right. So I need price to come back to this key level here for me to buy. But if it breaks it, I am selling. Now, also at this level where it is right now, if price goes above here, then I am buying. Again, it means it has rejected this higher low. But if price does not go above here and it breaks below this level, then I am selling. So that is my day trade sentiment for USD CAD, right? So we have looked at 4 pairs that carries the US dollar in it. Let's move over to some other pairs as well. So another pair that is very easy to make easy money from is the JPY pairs. All JPY pairs are similarly doing the same thing, apart from some that are way stronger than the other, like the British Pounds JPY and the Euro JPY. So almost all of them are in an important area. So we want to be careful how we scale in to make profit from them. But the two that I would recommend that we pay close attention to is number one, the Euro JPY. Euro JPY. It's very simple instruments to trade right now. Why? Because it's moving in a clear uptrend, just very simple uptrend. Now, if we buy now, we might want to prepare our mind for some drawdown. It's as simple as that. If you buy now, we want to prepare our mind for some drawdown. So there are two ways to approach it. Because it's moving in an uptrend, we are still buyers. The two ways to approach is one is to put a buy stop above this higher high. You can put a buy stop above this higher high at 161.867, so that it is only when price goes above from here that will be in a buy. Because this area is actually the neckline of this double top that we are seeing at this previous level. So it's an important area for Euro JPY. So we trade what we see, not what we think. Trade what we see, not what we think. So because we're still seeing an uptrend, it is not taking out any important level of the uptrend that we are still buyers. So I would rather put a buy stop here above this higher high. So my buy stop will be here. Buy stop, yeah. And then the second way I would also like to approach this is I can also put a buy limit at this turncoat support, meaning that I need price to just pull back to this turncoat support before I buy. So I can also put in a buy limit here. Price is likely going to pick one out of these two. So my buy stop is at 161.867 for Euro JPY. And then my buy limit is at 160.185. 160.185. All right. Okay. Let me type that price out for us. For the Euro JPY, EUR JPY, our buy stop is at 161.867. Then our buy limit, Euro JPY as well. Euro JPY buy limit is at 160.185. All right. So that's how I'll be approaching the Euro JPY, right? Until price takes out an important level of this uptrend, then I'm still buyers. As a day trader, that is what I will still do, basically. And then lastly, the other pair I would like us to pay attention to for the JPY pairs is NZD JPY, NZD JPY. So JPY is weak, and then NZD is apparently weak as well. So as a day trader, I want price to come back to an important level where I can just simply make simple money from. And that is this level here. It is around 19.250, 19.250. See, just price just consolidating. It's just simple to sell high, buy low, sell high, buy low. So those two price action candles that I need to see here must appear, meaning a red first followed by a green. Then I can easily enter a buy, my stop loss below, then my TP just above here, 1:1 or 1:1.5. That's how we're approaching the NZD JPY, right? So we've done two pairs for NZD JPY. So let me go over one more pair for the currency, and then we'll now look at some commodities. So let me touch on NZD CAD. NZD CAD is also another very simple chart we can make money from today. Why? Because it's just a straight downtrend. No, it's no brainer. Once you go to NZD JPY, NZD CAD rather, sorry, NZD CAD on the 1 hour time frame, we're going to see a smooth downtrend, smooth downtrend. So if we sell right now, because the last pullback has happened already. If we sell right now, there's a very high tendency you'll be in profit for a while, and then there might be a pullback again. It continues down. Why? Because it has already done a major pullback. But anytime you sell when the trend is still on, as long as you are trading, there's still a very high tendency we'll be in profit. All right. We just need to position our risk properly. So what I'm saying in essence is that for NZD card to enter a sell now, this is where it is wise to properly position the risk. Let me use here to explain that to us. So right now, this is what NZD card is doing. We have seen the pullback, and then it's attempting to create a new lower low, pullback. So it's somewhere around here right now. So if we sell here, there's nothing wrong with that. Our stop, this is the level where price must not go above from. All right. So we might want to put our stop here and then our TP here. Or we might just exercise patience for price to go lower and then give us a pullback and we can sell all over again. Anyhow, we intend to approach it, or we can just put a sell stop below this lower low. It's as simple as that to approach the NZD card. So NZD card, it's a direct sell. It's a direct sell. So I would like to do an instant sell for the NZD card on my MT5 account and just show us how to properly be on the trade. So sell. I'm selling the NZD card right now. Just put my stop below the previous, above the previous lower high. Then my TP can just be below. Simple 1:1. Then I'm good to go. Right? So that's how we're approaching the NZD card. NZD card downtrend, very smooth sale down. As simple as that. So let me also touch on one other pair again, one other cross pair, and then we'll move to commodities. So the other cross pair is the Euro New Zealand dollar. The Euro New Zealand dollar. Euro New Zealand dollar is also in a smooth uptrend right now. So day traders have to pick trades on 1 hour time frame because price is presently at resistance. So anytime price is moving upward, once it starts to break resistance, it is supposed to turn them to support. So the approach for the Euro NZD is just a simple breakout and retest. Let's just wait for simple breakout and retest, and then we can enter our buys. Simple. It's as simple as that. Why? Because price is not taking out any major key level. So it's a smooth uptrend, but we need to respect that resistance right now. We don't buy at resistance. We can buy above a resistance, but not at resistance. So I want price to simply break this resistance and then give me a pullback, then I can buy easily. All right. So that will be all for the currencies. Let me move now to commodities. Let me touch on gold. So gold, today, there is no news for USD. There is no pre-planned news apart from unplanned news. So if we look at the major trend of gold, it has been moving to the upside. That's the major trend is the uptrend. But in between, we have consolidation, minor downtrend, and all that. So let's scale down to the lower time frame and look at how we're going to be approaching it. Now, the Monday candle mostly is always the high or the low of the weekly candle. The Monday daily candle, most times, is always what is forming the high or the low of the weekly candle. You can go back and please backtest what I just said to get clarity on it. So right now, there's not so much move on gold right now. How would I be approaching it as a day trader using the logic of trend? All right. So if I look at the previous downtrend, I'm presently on the 1 hour time frame. This previous downtrend, these are the lower highs. Remember, I said that the most important part of a downtrend is a lower high. Has price taken out any lower high? Yes. So price has taken out this lower high of gold H1 time frame. So we have what is called change of character, CHOCH, change of character. Now, so because price has taken out the previous lower high, would assume it's now, would know that it's now in an uptrend. What is the most important part of the uptrend now? The most important part is the higher low. See, so I'm marking out the higher low now. This is one higher low here, and then this is another higher low here. So except price takes out any major higher low, then as a day trader, I'm only looking out to buy gold. I'm only looking out to buy gold. Remember, it is also largely affected by the US index, right? So it's moving in an opposite way in the direction of the US index. So as a day trader, I'm hoping to buy gold right now, except it breaks this higher low. Except it breaks this higher low, I'm tending to buy gold. Remember, I only need 20 to 25 pips, and then I'm done for the day, right? What do I need to see before I would think of a sell? Price just have to take out this higher low. Simple. Price just has to close below this higher low. If price closes below this higher low, then I'm taking a sell. But right now, price is not taking out this higher low. How do I know price is not taking out this higher low? This candle forming presently must close bullish. It has to close bullish. Once it closes bullish, I can enter my buy and then put my stop where price is not supposed to get to, and then my TP above. Remember that it is always wise, because losses are the business expenses of trading. It is always wise to plan for the risk involved. Don't let the risk come to you unaware. You and your risk should not be meeting yourself for the first time. You should have planned for it even before it happens, anticipate it. So the only reason why my buy bias as a day trader on gold will be wrong is if it takes out this higher low. But if it's not taking it out, and then I can see this present candle forming, once by now I see a bullish candle, then I'm entering my buy and my stop is just below my TP above. That is how I'll be approaching gold from a day trader perspective. All right. So let me touch on oil as well, and then we'll move over to indices. So oil technically has been very, very choppy, right? That's just been consolidating. This is what we call, this is what I always say, that price is in a town hall. See, just consolidated inside of that town hall. And once price is consolidating like this, the only thing you want to do is to sell high and buy low. That's just how to approach oil. Just sell high and buy low. This is what I mean. Price has no clear direction right now. Right now, the only thing it is doing is that it's just moving in between a resistance and a support. That's all. So while it is in between these two places, it is actually not wise that you trade in between them. The only thing you should do is to sell from this resistance or buy from this support. It's as simple as that. Don't trade in between. Right? Don't trade in between. Just sell high and buy low. Just sell high and buy low. It's as simple as that. Right? Just sell high and buy low. Um, okay. So let me go back again to my MT4. So just sell and buy low. It's as simple as that. And oil is a very good chart for both swing, day traders, whatever type of trader you are. Just wait for the price gets there. In fact, on your demo, you can just put a sell limit here so that it can notify you when price gets to that area, and a buy limit below here. It's as simple as that, and then you can approach it. All right. So let me do indices now, and then I will now take on some personal requests before we call it a day. Right? So let me start with the Dow Jones, the US 30. The US 30, all indices, majorly the US indices, apart from the US 2000, they are all moving in same direction. Right now, all of them are all moving in the same direction, which is up. So the logic of trading indices that I understand very well is because it is majorly consists of majorly performing companies. There is no company that's permanent in all of these indices. You are in it based on performance. You are doing well, you are there. You're not doing well, you're not there. Why? Because it is a very key driving force of the US economy. You see it? So if that is the case, it means I'm only looking out to buy on any US index. But the best time to buy is anytime it has dropped. Anytime there is a drop on the index, that is a good time to enter and scale in on a buy. You see, so right now, as a day trader, if I buy now, my stops will just be below this stone cold support because indices, no matter how high you feel it has gone, it can still go higher. And no matter how low you feel it has gone, it can still go lower. It's okay to speculate your moves. Just plan for the two possible outcomes. So because it is moving up, I'm only thinking of buys. We don't look at the pullback of indices as we look at the pullbacks of currencies. We don't move the same way. So I'm thinking of buy on the index. Why? Because it's moving up. That's just why I'm thinking of that. But I know that sooner or later it is still going to drop. From the perspective of a day trader, I am buying. From the perspective of a swing trader, I am waiting for that major drop. I'm waiting for it to drop and give me a pullback that is very reasonable, and then I can enter a buy. So it's similarly the same thing. It's similarly the same thing for all of them. All right. Remember, I said that no matter how high the index has gone, it can still go higher. No matter how low the index has gone, it can still go lower. I don't believe that there is anything that is called this is the highest it has gotten to. There's something called all-time high. That is true. But price is always attempting to create a new resistance. There are no new supports. There are only new resistance. There are no new supports. There are only new resistance on the indices market because price has not returned back to where it started from initially. So to us, we might be looking at the US 30 that 37, 38,000 is actually the highest it has gotten to all this while. Yes, it's true. But there was a time it was 20,000. There was a time it was 15,000. There was a time it was 10,000. So I'm not of the opinion that this is the highest it has gotten to. So from here, it should fall drastically from here. No, that is what I think. I need to trade what I see, not what I think. So until it falls, and then I'll pick it up again. As a day trader, I'm only thinking of buys. As a swing trader, I'm waiting for the sell. It's actually not right to anticipate that there's going to be a massive fall on the US. In fact, every massive fall on the US index can be traced to an economic event that happened. So it can be traced largely to an economic event that happened. So I'm still thinking of buys as a day trader, and then I'll wait for the sells, the massive drop before I will buy again as a swing trader. It's the same approach for the US 30, the US 100, and also the US 500. All of them, they're all the same approach. The only reason I would think of a sell as a day trader on this US index is if it takes out a key level. If it takes out a key level, or I will just wait for it to consolidate more and then use my pending order. So I can see a close range consolidation here, and then I can use my pending order as a buy stop and a sell stop. Simple. But more of the time, it's always wise to think of buys for the US index. The index that we can take advantage of all of the moves that the US 30, US 100, and US 500 have done now is the US 2000. But remember, to enjoy trading on the US 2000, you need a reasonable account size. So the more the merrier. It's not wise to trade the US 2000 or the US index with a very small capital. No, you you would need to, top up the account to make sure it's quite reasonable for you to trade it conveniently. All right. So all of those moves that those previous indices have done, I need the US. I'm of a positive mind that the US 2000 is going to replicate those moves. So I'm expecting a good up move on the US 2000, either as a day trader or as a swing trader. We are all hoping to enter a buy trade on the US 2000. And then we have the DE40. DE40, right? So let's go to the chart of the DE40. Then I will now take personal requests. So all, because there's no news today, we don't have any pre-planned news for the US dollar or the German 30. It's a clear uptrend. See, just a clear uptrend. So DE30 is also buy bias for me because I can see the club. The same sentiment that is going on in the other market is also what I'm saying. There's nothing like it has gotten to the very top and then it's massively going to fall. No, it has to fall first for it to see. We trade what we see, not what we think. So, according to what I'm saying, price is not taking out any important level of this uptrend. So, just ride the trend. Just ride the trend. Is still a very strong uptrend. If I even scale down much lower to maybe the 15 minutes, see, I can see a breakout and retest. For me to join this trend, I basically don't have to enter an instant buy now on the DE40. No, I can just put a buy stop above here. So it will only pick me once it goes out of this consolidation. All right. So that is how we approach the index market. So if we have personal requests, we can begin to mention them so that I'll take a look at them for the next 10, 12 minutes before we call it a day. I just talked about the US 100. Another instrument, please. Okay, someone is asking if we can close our position on AUD USD. No, I don't think it's time to close it. We don't have to close it right now. It's not yet in a reasonable profit, so there's no reason to close it. All right. Okay, USD JPY. Okay, I requested for USD. Oh, yeah, let's go through USD JPY. So let me go over to the chart of USD JPY. Let me go over to the chart of USD JPY. Okay. So USD JPY is moving up. Of course, yes, JPY is weak. It's very weak. Every instrument, every currency is just taking advantage of the JPY pair. It is the easiest currency pair to trade right now. Why? Because we know it is weak. So I'm only looking for buys against the JPY and then just selling JPY categorically. So if I am because we have different types of trader. Let me start from the one that most of us are day traders. Day traders on USD JPY, we are only looking out for buys. Now, price is not taking out higher low. Just buy TP before this resistance. At TP before this resistance, that is still like a 65 pips. That is more than enough for a day trader. The stop loss also around 40 something pips. That's okay. We can get a smooth 1:1 on USD JPY. Why? We are just taking advantage of the weakness of JPY. As a swing trader for USD JPY, I would like to trade it from the higher time frame. So I'll be looking like maybe the H4 time frame, for instance. It's the same thing too. I'm also thinking of buys. Then my stop loss will just be below this stone code support TP before that resistance. So I have a smooth 1:1 or 1:1.5. Like I said, we are only looking at for buys. Why? Because the JPY is primarily very weak. That's all. And then we just write the trend, right? Yes, yes, sir. Breakout and retest on the US strategy, US 100. Yes, it's okay. Yes, that is what I'm suggesting, sir, that we look out for. Please, what is the entry for gold? For gold, the entry for gold. So I said, because what we are looking at immediately, what we are looking at right now on the gold chart is, as a day trader, we are thinking of buys. Even as a swing trader, we're also thinking of buys. Why? Because price is not taking out this very important higher low. So I said this candle must close bullish, and that will happen around 9. Once this candle closes, because it is presently at a previous higher low, once it closes bullish, we can enter our buys, our stops below the higher low, and then our TP above. So that will give us a smooth 1:1. So it is actually the close of the candle, not a particular price. Just wait till 9 once that candle closes bullish, because the closing position of a candle is more important than the opening. All right. No, no. NZD card. Okay, somebody's asking if we can close the trade on NZD card. No, sir. Remember, I said that the only time it is wrong is when price takes out the previous lower high. Price has to take out the previous lower high. If price has not taken out the previous lower high, we are not yet wrong. It is not, you don't expect to be in profit immediately you enter a trade. That's not the right way to approach the market. As we've said, in a downtrend like this, if price is going down like this and you sell, and then price to start to return back, you are not wrong until it takes out a lower high. As long as the lower high is still valid, you are not wrong. That is why your risk is there. So there's no reason to, and also we don't even have a drawdown right now. So just leave it, except it's taking out the lower high. If it's not taking out the lower, you're fine. You're good to go. Okay. British pounds, US dollar. British pounds, US dollar. Okay. So let's look at GU. I didn't touch on GU because we've already looked at many um, currencies that carries the US dollar. So let me quickly touch on GU, right? So GU is consolidating. Why? Because it's in an important area. It's in a very, very key important area. So it's consolidating seriously, right? So if I scale down to the lower time frame, I can just see a consolidation. Remember the logic for oil. It's also what we are going to use for GU. All we need to do is to sell above or buy below. It's as simple as that. So on my demo, I can put a sell limit and a buy limit. And then once price picks any of them, I will go back and check for my signals to sell. Signal to sell at resistance, green candle first, followed by red. Signal to buy at support, red candle first, followed by green. That's how it would happen for me to trade on the British pounds, US dollar. And then the continuation of the trend, either above or below, is a simple breakout and retest. Simple breakout and retest. So if price is consolidating, if price is consolidating in this form, once I see that price is moving in a box like this, like I said, it's not wise that we trade in between. Just sell from the resistance, sell from here, or buy from here, right? And then our stops will just be above until this price will finally break out. Once it finally breaks out, if it breaks out above, we just need a breakout and retest, and then we'll buy. If it breaks out from below, we need a breakout and a retest, and then we'll sell. That's how to approach any market that is consolidating like that. All right. So let's take one more, and then we'll call it a day. Okay. Somebody said USD JPY, but from the currency strength meter, USD is lower than JPY. All right. I don't know which currency strength meter you're looking at, but one thing I can tell you for free is that the currency strength meter is true. It works, but it's actually giving you analysis based on what has happened in the past. Now, remember, I said the major reason why we are not buying the Japanese yen is because it is weak across board. It is just we are leveraging on the weakness of JPY, not on the strength of US dollar. Yes, I know the US dollar is weak, but we are leveraging on the weakness of the Japanese yen. Yes. All right. What is the minimum amount to trade on US 2000? I would suggest, sir, that you contact your account manager to get clarity on that. I don't know your present trade balance, so I don't want to give you a figure just randomly. Just please contact your account manager and speak to him or her so that you guys can get a clear head of that. Okay, so to wrap up our today's analysis, let us just watch out for all of those things that we've spoke about, then we've looked at, and then as we are trading them, we should also use the same concept over and over and over again. Like I said, that we need to do the same thing consistently. We need to do the same thing consistently to get good results. We really don't change styles all the time. You can have different approach to different market scenarios, but majorly you are doing the same thing consistently. And then as you practice more, practice make permanent, not really perfect, because you can't achieve perfection. So practice makes permanent, right? So I'll be seeing us again some other time. And let's have a fruitful week ahead. Thank you very much.
Thank you very much.